Today, we're diving into something that so many traders get wrong, but it's absolutely critical: timing. You see, it's not just what you trade, but when you trade it that can be the real game changer. I mean, think about it like this. Are you fishing in a dry pond, trying to trade, say, the euro against the dollar during the dead of the Asian session? It's exactly like that. You can have the best gear, the best strategy, but if there are no fish swimming, you're just wasting your time. The action simply isn't there.
So that's what we're going to fix right now. Over the next few minutes, we are going to decode the market's 24-hour clock. The goal? To give you a clear map that shows you exactly where the real opportunities are hiding so you can focus your energy where it actually counts.
Okay, let's just get right to it. Timing really is everything. I mean, trading without knowing what session you're in is kind of like trying to navigate the ocean without a compass. Sure, you're moving, but you probably have no idea where you're actually going.
And listen, this isn't just some small little mistake. This can absolutely crush your performance. You could have the most killer strategy in the world, but if you apply it when the market's asleep, you're setting yourself up to fail before you even place the trade.
Let me give you a perfect example of a classic mistake. Let's say it's the Asian session, and you decide to buy the British pound against the Japanese yen, but at the same time, you sell the euro against the yen. Well, guess what? During that session, the yen is the main currency making moves. The pound and the euro, they're pretty quiet. This means those two pairs tend to move together in the same direction. So if you're betting on them to go opposite ways, you're literally betting against yourself. One of those trades is almost guaranteed to lose.
So how do we avoid this mess? It's actually pretty simple. You just have to understand the market's internal clock. The entire 24-hour trading day is really broken down into 3 major sessions, and each one has its own totally unique rhythm and personality. Let's meet them.
So here is the daily schedule, all in GMT. Things kick off with the Asian session. Then London wakes up, and finally New York comes online. But you see that sweet spot, that overlap between 12 p.m. and 4 p.m.? That's when London and New York are both open for business. That, my friends, is prime time. It's the market's rush hour, where volume and volatility just go through the roof. But knowing the times isn't quite enough. To really get an edge, you have to get to know the personality of each session. They behave differently, they like different currencies, and they serve up completely different kinds of trades. And it really all boils down to 3 key differences we need to watch for. First, trading volume. You know, how much money is actually moving around. Second, which currencies are the stars of the show. And third, the typical price action you can expect to see.
And this table just lays it all out perfectly. The Asian session? It's pretty low volume, kind of sleepy. The price often just bounces around in a range, which is great for certain strategies. Then, London opens and bam, the volume explodes. We're talking about 40% of all Forex volume right here. This is where you see big breakouts and strong trends. And then, New York joins the party, bringing its own wave of high volume, often driven by huge economic news releases that can completely reverse the moves we saw in London. So here's the secret sauce, the principle of currency dominance. For the cleanest, easiest to read trends, you want to trade a pair where only one of the currencies is the main event in that session. Think about it, trading the euro/yen during the London session. The euro is super active, but the yen is quiet. That means the euro is in the driver's seat, which gives you a much clearer trend to follow.
All right, enough theory. How does this work in the real world? And what about something like gold? Let's do a little masterclass and walk through a step-by-step strategy to see how all these timing principles come together.
Now, the main tool we're going to use is called Fibonacci retracement. And hey, don't let the fancy name scare you off. All it does is help us measure a pullback within a trend. Gold is famous for making a big move, pulling back a bit, and then continuing on its way. This tool just helps us find where that pullback might end and turn around. Specifically, we're looking at the 61.8% and 78.6% levels. They can be awesome entry spots. Okay, here's the 5-step playbook. Step 1, you start on the daily chart to get the big picture. Just mark your major support and resistance zones. Step 2, zoom into the 4-hour chart to see the immediate trend. Step 3, drop down to a 15-minute chart and patiently wait for a strong, obvious move in the direction of your trend. Step 4, this is the magic, you use your Fibonacci tool on the pullback to nail your entry. And finally, step 5 is just good trade management. Set your stop loss, pick your target, and let the market do its thing.
But, and this is so important, you can follow this process perfectly.
find a textbook setup, execute it flawlessly, and the trade can still fail. In this real example, the price did exactly that. It reversed and hit the stop loss for a loss. Why? Because trading isn't about being right 100% of the time. There are no guarantees.
And that really gets to the heart of what it means to be a professional trader. A losing trade doesn't mean your strategy is bad or that you failed. Losses are just a part of the business. The real skill isn't winning every single time. It's having the discipline to stick to your plan, manage your risk, and accept that taking a loss is just part of the game. So what's the big idea we want you to walk away with? It's all about making a shift away from just randomly reacting to wiggles on a chart and toward a strategic, time-aware approach where you know the personality of the market you're trading in.
So, here are your new rules. First, always trade with the session's personality, not against it. Go with the flow. Second, for cleaner moves, focus on those pairs where one currency is clearly in charge. Third, trust your strategy. Let it be your guide, whether you win or lose. And last, never forget that big, high-impact news can come out of nowhere and completely change the game no matter how perfect your setup looks.
We've seen that the market isn't just random chaos. It has a pulse, a rhythm. There are quiet times, and there are loud, energetic crescendos. So the real question is for you. Now that you know the market has a rhythm, how are you going to change the way you listen to it?